Hey, welcome back everyone. In this lecture, we will talk about candlesticks. So, candlesticks were discovered in Japan and are one of the most efficient ways to do stock trading. So, this is a candle. Let me add wicks to it. And yeah, so this is a green candle. So there are basically two type of candles, a green one and a red one. I mean, the color can be changed in different patterns and different like charting platforms, and you can even change your color. But the most basic ones are the green and red. So the green one says that the price open at this level where the candle is starting, and it closed at this level where the candle is like it is on the top. So this is the green candle, and if we draw a red candle here, let me do that for you. So if we draw a red candle here, so a red candle says that the price opened at this level and it closed at this level. So a green one says that the price moved up, and a red one says that the price moved down. So this was all about the candle opening and closing. Now let's talk about other things. So we have this whole thing is a candle body, and this thing right here, these two parts, these are the wicks of the candle. So what do these means? Let us assume that this is a 10, this is a 5, this is a 1, and this is a 15. So in a green candle, you already know that price open right here. So it means that the market open at $5 price right out here. Okay, and it closed at the $10 price, right? But let us assume this candle is a daily base candle. So it will mean that in the whole day the price even went up to $15, which is the end of this wick here, and the price even fell down to $1, which is the end of this wick here. So this means that the market opened at $5, it even went up to 15, it even fall down to 1, but it ultimately closed at $10 price. If we do that thing, the same thing in the red candle, it'll mean that the market opened at $10 because it is a red candle, and it may have gone up to this $15 at this wick here. It may have even went fall down to $1 right out with this wick, but ultimately the candle closed at $5. So that is what the red candle means. Okay, so now the problem with candlesticks is that we personally don't believe in candles, but if we get those candles on support and resistance, and we are also getting the same signals with other indicators which the candlesticks are telling us, then they have a great importance. Okay, but if you find them in middle of a trend and you have no signals from other indicators and things, then we don't personally believe in their importance. Okay, so let's get started with some of the important candlesticks. So the first one is the Marubozu, and this is a really strong candle. So let's draw a green Marubozu. Now you will see that this is a Marubozu. Now there is no wick in this candle, and if there is a wick, it'll be like even like this much small, and which has almost no relevance. So a wick will be a lot smaller, and there is like you can just say that there is almost no wick in this candle, and the red one will obviously look like this here. So the size can be anything, but it is a normal without wick candle. Now the thing is, if you get a green colored Marubozu on a support and resistance, you should expect the price will go up, and in case of the red one, you should expect that the price will go down. So I'm here with a chart for the Marubozu candle. Now you can see that this is the Fibonacci grid with the strong support level of 50 here, so 0.50 right here, and you can see when the market came on this level, there was a green Marubozu formed, and after that you can just see how the price started rising. You can just see it is still rising, and then it is just going up. So on the support level, when there was a Marubozu, it was a highly important candle. And let's see this in a downtrend. Now here you can see that this is a resistance level of the Fibonacci grid, which is 1.27 right here. So on this level we got the red colored Marubozu, and after that you can just see the other three candles successively were also red. So this was also an indication that the price should fall, and it fall to this level. And now let's go ahead and cover the other candles. Okay, so let's move on to the another candle, which is the hammer in this case. So let me show you how a hammer looks like. Now you will find a body which will be small enough, and there will be a wick which will be almost twice of the body. So this is one part, and this will be second part right out here. So you will get the body which will be short, and the wick should be almost two times of the body. And there is a possibility you will find a really small wick, or you may not find a wick on the top, but there should be a long wick on the bottom. So that is called a hammer, and you may find this thing in green as well as red again. So go ahead and create that one as well. So this one will be a green hammer here. Now there is a thing that if we find a hammer in a downtrend, we called it a hammer. But if we found a hammer in a uptrend, we call it a hanging man. Now, there is not a big significance of the color of a hammer or a hanging man, but the thing is, let's say we are in a downtrend and we find a green color hammer, then we will say that it has a little more significance than a red one, because a hammer will lead to a trend reversal. So if it was a downtrend, we get a green color hammer, which means that it is already a green one, then it has a little more significance that the price will go up. And if we were in a uptrend and we get a red color hanging man, then it would mean that yes, the significance is a little bit more as compared to a green one, but it's not a big change. Now, personally, I don't think so that there is a lot of importance of hammer or hanging man if they are found just alone. But if we get the another candle as a reverse one, let's say we have this green one in a uptrend, and we get another candle which is something like this one, which is a red candle and is below this one, the below this hanging man, then this is a 200% sure confirmation that the market shall go ahead and go in the trend reversal, and it will just go ahead and get down. And let's go with the hammer. So to avoid confusion, let me delete these candles here. So let me delete them first of all. Okay, and just avoid the color basically. And let's think now this is a hammer. So if we get the next candle, so hammer is always found in the downtrend, and let's say the trend is down here, we got the hammer. And let's say the next candle is a green one which opens above this one. So let's say we get this kind of candle, then that is a sure confirmation of the uptrend. This is a downtrend. Here you can see we got the hammer, and the next candle is a green one, also is above this hammer. So this was a sure confirmation of the trend reversal, and the trend got reversed. Now let's see this thing on the hanging man. So here the trend was uptrend, a really strong one, and you can just see these are the support and resistance lines. So always make sure that you are always working with the candles on the support and resistance. So on the resistance here we got the hanging man, and the next candle was also a like it closed and it even opened below this one. So it was again a trend reversal, and you can just see the trend again reversed right out here. So coming to the third important candle, which is a shooting star. Now a shooting star is exactly opposite of a hammer. So it will be like a small body right here and a wick, but the wick will be in the opposite direction. So the longer wick will be right here, and there can be a negligible smaller wick in the downward shadow as well. Now the thing is that the shooting star is not found in a downtrend. It will be always in a uptrend and should be near the resistance level. And if you find a shooting star with some conditions, then it will be a trend reversal and the uptrend will become a downtrend very soon. The next candle should have its close below this close. So the close of this candle is this level right here, and let's say the next candle is right here, and the close should be below this one. So the first condition was this, and there is a, like, it is not a condition, but it has a great significance to be told that if you find, okay, sorry, yeah, so if you find a candle which was before this one, so let's say we have a candle right here. Now if we have a green candle before the shooting star, then it has a really lot of significance. So let's move on to the practical part. Now you should always watch for other indicators as well. Here is the Fibonacci grid, and which is showing that we have a resistance level on this line right here, and you can see we got a shooting star on this resistance line. Now this was a green star, like it really doesn't have a lot of significance about the green one or the red one, because like a red one will have little more significance than a green one, but it really doesn't make a lot of difference. So we have this thing. Now we got a shooting star here, and the low of next candle was below the first one, and the first candle of this one was also a green one. So here all the conditions got satisfied and the trend changed into a downtrend right out here. Here is another example. Now this is again a resistance level here, and you will see that this uptrend became a downtrend right here when we got this red colored shooting star having a green candle in the previous one, and the next candle's low was below this first one. So all the conditions got satisfied and this became a downtrend out there. Okay, the final one is a doji, and a doji is a really small candle. So you will find that the open and close is almost very near, or it can be even the same. So the open and close will be really near, and it really doesn't matter what the wicks are. So the wicks can be these, or the wicks can be even this, or the wicks can be even this much big. So it really doesn't make a lot of difference with the wicks, but the body should have the opening and closing price very close to each other. Okay, so I just came up with a red color doji. Now there is almost no color basically, so it, like, the opening and closing is too uh, like too near, so it really doesn't makes a color, so you will not even be able to notice the color, and it really doesn't have any significance on the doji. Now a doji means uncertainty. So let's say we have a uptrend going on, everyone is buying and it is a strong uptrend, and we get a doji right out here. So let's say we got a doji here. So what will happen is, it means that there became a uncertainty. So all the bulls were buying and buying, and now they got the doji. So like they got all uncertain. So which means that the trend may reverse. So a doji is a really strong reversal here, and it has a great significance when it is found on the resistance levels in uptrend. It is also true for the downtrend. So you may even get the doji in the downtrend, and it has the significance in downtrend as well. So let's say we got the doji here, and it means that everyone was selling, and now we have got a doji, which means a uncertainty in the market. So the trend shall reverse and it'll lead to a uptrend. Now I would recommend that go ahead and wait for the next candle for the confirmation. So it'll be the similar like the previous ones. So let's say it is a uptrend, we got a doji. Now if the next candle uh, it has a low of, like, the low of doji was above the low of next candle, so the low of this candle is below the previous one, it will lead to a confirmation and the price shall fall and the trend will reverse. Same is true for the downtrend as well. So if we got a candle right here whose closing is above the closing of the doji, so the price closed here, and in this case the price is closing here, then this is again a confirmation for the up. So coming to the practical part, here you can see that we got the resistance level here, and we were having a uptrend, and On the resistance we got a doji. So you can just see how close the opening and closing is, and wicks doesn't matter. So we have a doji here, which means a uncertainty. Its close was this, and the next candle is closing below this close, so it is closing here, its close was here, which is a confirmation, and the downtrend became right out here, so it followed. Taking the other example, here we were having a downtrend right out here, so price was going down and down, and this was a support level of the Fibonacci grid. And on the support level we got the doji again, and with the confirmation of the next candle whose closing was above the closing of this doji, we got the indication that the trend shall reverse, and we got a uptrend right out here. Now, I would again repeat my words that don't trust these candles until they are very near to support and resistance, and you are getting the same signals through other indicators as well. Now, an important thing to notice here is that you should not trust them below 30 minutes. So, a 1 day candle, a daily candle will be like of great significance, but you can go down to 30 minutes, but not less than 30 minutes. So, a candle which is less than 30 minutes doesn't have any significance. And if you go in the market, you will get a lot of candles, so hundreds of candle patterns and candles, but don't waste your time in studying all of them. You should know the major and the important ones, which we just covered right here, and just start relying on other tools as well, and don't go ahead and rely on the candles completely. So this was all for this lecture. I'll see you in the next one. Thank you for watching.